Hi, good morning, everyone. Happy June 1st. Wanted to talk about how my paycheck doesn't pay my bills, my portfolio does. If you're new to my channel, I'll use this image from time to time just to make it simple to understand. So my W-2 income rolls in, it goes into my brokerage account. I don't use a traditional banking account. Once it clears the brokerage account, I invest all of my funds in the dividend and growth assets. Those dividends will pay a good chunk of my bills. And then whatever is left over, my margin kicks in and pays the gap. And this cycle will continue until my dividends snowball and pay all of my bills, which will then allow me to be financially free. I want to talk about Albert Einstein's quote below there. I've mentioned this on a prior video, but compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. What a lot of us do is we go to work, we exchange our time for money, we get our paychecks, we spend those paychecks to zero, and then we got to go back and do it all over again. Essentially, what I'm doing is I'm taking all of my income, I'm investing it, I own an asset, that asset grows and or pays me and or does both. And then it allows me to compound quicker as opposed to just saving or investing what's left over at the end of the day. I want to jump into my portfolio just so you can see how things are going. So I started out here on the balances page just to try to clear up some confusion I see in some of the comments. My net portfolio value as of this morning is 118,514. My gross portfolio value is 233,000. That's the total value of the stocks that I own. So a good analogy for this is thinking about your house or your home if you own one. This would be the total value of the home. This would be how much I own or how much equity I have in the home, just for an analogy there. My margin is right here. So this is the amount of margin I've used, which includes some times I've invested in buying dividends and or floated my bills when I first started. If you scroll down here to the bottom, my paycheck rolled in on Friday. You can see that here. This will clear on Wednesday of next week. And when this amount clears, it'll immediately get dropped into my portfolio balance. And I'll be able to invest and buy additional assets that will grow. One way I secure my account is I always keep my equity right around 50%. So what I'll do come Monday is I'll take this 2.18% of my account. I'll go buy more dividend paying assets or growth assets, depending on what the market does, and we'll compound from there. Looking at my complete view here, we'll talk about this. So as of, again, Friday close, my net account value, we just talked about that. My total unrealized gain is sitting right about 28,000 approaching. My days gains on Friday were 990. The cool thing about this is I'm living out of this account. It's not stagnant. It's not just sitting there. So I'll show my transactions just so you can see. So you can see that I'm living out of the account. You can see right here, this is a payment. We're getting ready to go to Japan next week as a family. So I'm exchanging some US currency for Japanese yen. You can see Apple, Amazon, clothes shopping. My wife went to PetSmart, Kroger. So this account is not stagnant. It's being used to live out of. It's also being used to invest out of. So when you see my account value, that includes spending. So it's being used as spending. So I get growth, I get compounding, I get dividends. If you go to the estimated income tab, you can see this will ebb and flow as I've showed in other videos. But currently it takes the last payments and it annualizes those on each trade. So currently I'm sitting at 44,406 for the year. The next month, you can see I'm sitting at 3,700, actually 3,800 there. So my bills are about 95,000 to 100,000 a year. So as this snowballs and this gets higher and higher, eventually that will allow me to be free from a 9 to 5, essentially. So looking at my performance as an update here, this is cumulative performance. So we'll start at 3 year. So you can see my 3 year performance. I'm sitting at about 68% there. You can see the S&P is at 42, the NASDAQ's at, we'll call it 58, the Dow's 27, the Russell's at 10. If you go to the 2-year, I'm just showing you each one of these for transparency. 54%, 38%, 44, 25, and 13. 1 year, you can see doing really well here post tariff situation in April. So on the 1 year, I'm sitting at 43%, S&P 12, NASDAQ 14, Dow 9, and Russell a little bit negative there. And year to date, you can see outperforming the indexes as well. And the reason this is because I'm getting growth from my growth stocks, and I'm getting cash flow. Even when the market's down, I'm still getting cash flow. And that's how this cycle works. And that's how I live out of the brokerage account. So again, one more time, just to summarize, I'm living out of this account. Money is being spent out of this account, but I'm also getting growth, which is fighting that current. And I'm also getting dividends, which is cash flowing. And I'm also growing and compounding my account. We have a calculator here on Discord. If you decide to join the membership, which I'll post in the comments, we have a couple calculators here. We have a pro calculator. If you go in here, you can type in your starting portfolio value, your starting margin debt, your W-2 contributions. It takes into account the inflation rate, living expenses, and then the blended dividend yield. So I start out with these blended dividend yields. So we talk about some closed-end funds. They pay you a dividend here, a distribution rate. Some of these actually even drip at the NAV, and I want to talk about that just real quick here. So looking at Cornerstone's a closed-end fund. It just went through a rights offering. So every Friday, they update their net asset value. And as of Friday, their NAV was at $6.56, and their trading price was at $7.77. So right now we're sitting at about an 18.5% premium there to NAV. And so if you own this stock, every month when they pay you the dividend, they'll drip your dividend down at this NAV price, which is really great and allows you to basically realize immediate gains. So on the Excel file, I have the closed-end funds here. The dividend boost is that drip at NAV, okay? And then you have the blended yield. If you use these specific funds that I have here, your blended yield would be about 47%. In the comments of YouTube, I always say conservatively 25 to 30%. And in reality, it's a little bit higher than that, depending on what blended stocks and assets you buy. I have allocation here just on this spreadsheet. Again, this isn't my whole portfolio. This is just a good starter. We have 50% here. We have 25% here and another 25% in these funds. And so basically what the calculator will do is it will start with your gross portfolio value. It will go to your drip dividends. These are the ones that drip at NAV and will compound your account quickly. The non-drip dividends would go towards your bills and your interest. So again, these would be used as cash here. These would go towards compounding here, just for clarification. Interest paid the first month would be 0. Your cash after interest would be 401. The monthly expenses, including inflation, would be 7,500. So you would start out using basically 7,000 there of a bridge, and we'll take it all the way across. Your W-2 income would come in. This would be the coal into the steam locomotive that keeps the engine running. And then if you go all the way down, basically when you see this turn to 0 here, and again, the stock market's not linear, so it's going to go up and down. This spreadsheet looks at it from a linear perspective, but in reality, it's going to fluctuate. But looking at this example, just showing you the power of compounding, on month 54, the non-drip dividends would be enough to cover the monthly expenses in this scenario, to where somebody has a $30,000 portfolio. Their W-2 contributions are $125,000 a year. Again, a 4% inflation rate's calculated into this. And we're saying somebody has an annual living expense of $90,000. Okay. And that's how it would work. So just for clarification, it takes monthly expenses, it adds 4%. It takes your W-2 on this, and it's adding each cumulative month there essentially, but the calculations don't take that cumulative month and add it up. It's calculated correctly for each month in the cells. and you can see the specific cells there. When you double click, you can actually see it up here, how the calculations work. But if you're interested in looking at the tools, feel free to reach out to me, and I'll post all the membership information there in YouTube. All right, guys. Hope you have a great start to your June and a great rest of your day. We'll talk to you soon.